Hi there. In this screencast, we'll take a look at some of the additional inventory options, specifically how we adjust inventory for shrinkage, spillage, spoilage, theft, as well as assembling inventory. We can take a look at a report that we can generate so that we can counter inventory, as well as adding a couple of bits of information to our inventory item records. So we have a report that is useful to generate to give to our employees at the end of the month when they're doing the inventory count. So it's reports, inventory, and services summary. And we just have the one asset account with this company. We would choose all of our inventory asset accounts if we had multiple, and I'll choose OK. So it shows me all of the inventory items that are linked to that asset account. You probably only want to have the quantity if you're sharing this with your employees who are doing the count. They don't need to know the cost or the value. So you could go to modify, report columns, and custom, and I'm just going to remove those ones. So we have a nice little lean report that we can print out, again, give to our employees at the end of the month who are doing the inventory count. And we generally bribe them with pizza and beer. Probably want to save the hard liquor until after they've counted. All right, so that's the report. So now they go off and they do the count, and it turns out that we're missing a 105. So we want to write that item off. So we go to inventory and services and adjust inventory. And the source here is simply memo. It's on the February 28th, usually the end of the month is when we do the count. And the comment is inventory shortage. And you would adjust all of the items that were below quantity. Generally, your inventory is affected by spillage, spoilage, shrinkage, or theft. So generally you have a negative amount. But sometimes in the case of maybe if you're selling chickens and rabbits, you might have additional inventory items. So you can either use a negative quantity or a positive quantity is my point here. So again, this is the 105. Which is a sculpture, so those break very easily. And we can just either enter, we just subtract the quantity, so we have one less. And notice that we can allocate, just like with a regular transaction. So we allocate that inventory shortage to the sales account, or whatever account, sorry, not account, but department. Whatever department is affected by that shortage. So it looks good if you look at the report here. The journal entry, cost of goods is increased, asset is decreased. Oh, sorry, let me just shrink that. The cost is increased, the asset is decreased. And we can go ahead and post. Now, the second example with inventory is item assembly. So there's two steps for item assembly. The first is to create the item assembly, and that's basically an inventory item that is assembled out of existing inventory items. So for example, if we're selling computers, and we also sell individual items that make up a computer, such as a hard drive, RAM, and processor, we would create the processor, the RAM, hard drive inventory items first, and then create the assembly, and then add those items to the assembly. So that's what we'll do in this situation as well. So I'm going to go to inventory, I'm going to create a new inventory item, and this is a I-100. its inventory. And we have no minimum level for this. We sell by the each. The pricing is $14.99. Linked is 1500, 4020, 5060, 5070 is the variance. And we're going to build this via two 301s. Two of those. One 401. One of those. 634. And four 811s. There's no additional cost, but there is a section in your book and in my notes. If you want to record an additional cost, you can choose the account that you want to record those in. I skipped that for this screencast to make it more lean. And I'll go ahead and, oh, this description here is Interview Corner. So there's my item assembly, and I'll go ahead and save and close. Now the second step is to one item. The second step is to build that item. So once you've created the item, you want to build the item. And what that does is it sucks the amounts out of the individual items and puts it into the inventory assembly. So for example, we're using two 301s. If I just scroll down here and look at my 301s, you see we presently have 8. So once I build one of these, I'll have 6. If I build 2, I'll have 4. I'm just going to build one. So in order to build this, we use build from bill of materials. So that's how we actually create the item for sale. You do not use the build from item assembly, even though it seems like that's the one you should use. It seems kind of counterintuitive, but it's build from bill of materials. And the source is House 1. I guess this is something we're doing for a project on February 28th. And I'll say assemble and interview corner package. We only have one assembly, so that's all that comes up, quantity 1, and we can go ahead and post. So again, this is built out of two 301s. We're presently at 8. So when I post this, you see we're now at 6, and our I-100s at 1. So again, 2 steps. Choose the items that make up the assembly, and then build the assembly, again using build from bill of materials. Now let's go ahead and sell one of these items. The benefit of doing this, by the way, is if you always have items that you sell together, you don't have to list each one of those individual items on an invoice. You can just basically grab a group. So not only is it useful for something that you physically build out of multiple inventory items, but it's also useful just to keep items that we always sell together. So let's go ahead and sell somebody one of those things. So I'll go to receivables. I'll create an invoice for Jay Freeman on February 28th, and we're selling them at I-100. Pops in, tax HST for everything. We're in Ontario, and we're going to go ahead and allocate that. Now we only have one item plus freight, so we could actually just use sales right here. That will allocate the entire transaction, including freight, to sales. Or we could also do it this way. We have to enter a quantity there. Or we could also do it this way. So whatever you like. It's exactly the same. You could also allocate via this and choose apply this allocation to entire transaction. So 3 ways to allocate an entire transaction to one department. And go ahead and post. Now the last thing we're going to look at is how we customize our inventory items. So there's a couple of little fields that we neglected to look at in level 1. So I'm going to add an image and a description to 501. So I'll go inventory, scroll down to 501. And under detail description, we can browse for a picture, a thumbnail, as well as add a description here. So I'm going to browse for the picture. I've got my folder that I downloaded in the first screencast, and there's the 2-seater there. And the description is, there's a big lengthy description in your book. I'm just going to type a few items there. You get the gist, right? Etc. All right, so that's additional inventory items, including adjusting, building from assembly, as well as the description and image field. Thanks so much for watching.